Alright, I had to do the creepy opening thing. Anyways, Ted here with some Eyes and Wicks, the podcast that's all about smart money. And smart money is basically institutional trading, how to trade if you're extremely rich, or how to make the poor people trade by going along with the rich people's way of teaching you how to trade, and by keeping you poor, pretty much. That's pretty much what it is. Um, and I made a video earlier this week and had no sound to it. It was just like my kind of, like what I thought about Bitcoin. And I just did it on my phone. I was somewhere else because I was doing some job stuff. So I'm going to do a little bit of an explanation as to what was behind the silent Bitcoin. So, but first, what you should do is you should tell your people about this channel. And how you do that? Well, you can share it, you can subscribe, and you can hit the like button whenever you want. There, all three options are on the screen. And yeah, let's just get right into it. Oh, we forgot to mention that it will be in the description of the channel. I am now an affiliate for MEXC, the platform for trading crypto. Not for sure how long that's gonna be because I'm studying to be a licensed um, financial advisor. So everything you see here is not financial advice. It is just from my experience and my opinion only. Um, but once I get licensed, crypto is pretty much going to go bye bye for me. Not really bye bye, but there's only certain people I am going to be allowed to purchase and or hold crypto from. And it's pretty much going to be anybody that has the CME um, kind of as their broker, I guess you could say, or maybe their custodian. I'm not for sure what it is, but the CME, Chicago, Mercantile Exchange, that's where you trade all the futures. So anywhere that can trade the futures for Bitcoin is where you'll be able to purchase them, and it's not going to be cheap. That's for sure. It's not going to be like how you can with the current, you know, awesome, exchanges that are out there. Like MEXC, I really like MEXC because it's similar to KuCoin, but they have more coins. They also allow probably a little bit more leverage. Um, and so I've been making a little bit more money on XC than I have KuCoin, to be honest. So I'd rather enjoy them. If you check out the links, from XC, you'll get 10% off, and the second affiliate is Ledger. Um, so if you purchase a Ledger Nano, a Ledger Nano X, whatever it is, and you use my link below, I do get commissions, and that's a way you can help support the channel without directly supporting the channel. And Ledger now has, I think, an offline exchange. So that's pretty awesome. So, you can take your hardware with you and also trade while online. So, yeah, so that's what I got for my new, and I had somebody reach out to from me from XC, had somebody reach out to from me from ledger. They've been seeing my ideas on Tradingview. They've been following me on. I don't have many followers. It's crazy. I had the biggest following on Tradingview, but they reached out to me on Twitter and things like that. And so, hey, that's where I am. So let's get to this Bitcoin madness that I have been talking about. So right now I have it on the daily, and what I was referring to, and if you have seen my actual idea, maybe I can get to it from here without getting off of this page. Let's see if I can. Does it? Well, let me see here. It basically, I put out quite a few ideas, and I haven't been wrong so far. Okay, here it is. I have 9 likes on it. Even though I entered in a little bit earlier than I should have, um, I still haven't hit my original stop loss. I'm getting close. I've gotten darn close. And I probably will, which is why in my idea, I extended it, but I still think it's going to go short. So if you hit play, you can see that it has gone up from my original idea, and it is somewhere. Yeah, it's right in here, right around just above the 20,000 mark, and I think I set my original stop loss at around 20,200. So, why do I think that it's still bearish, and why do I think it's still going down? Um, and if you go through this idea, I go through a lot of why I think it's going down. So first, there is what is called a fair value gap, a monthly fair value gap that started in 2020 below. If you look at the history of the last bull run in its pullback, it pulled back to right around anywhere between the 79% and the 88.6%. It pulled back to somewhere around there. And if we look at the current trend, current wave, whatever you want to call it, that fair value gap falls within that same area. Right now, it is just barely hit the 79%. So I think it still has some time to get below. This as the trading had started, I noticed some equal highs. I said, "Hey, don't fall for this. Don't don't buy it if it's gonna get above it and you think you're gonna catch a breakout, because it's gonna pull back and then make you think it's gonna go short. You're gonna go short with it, and then it's gonna go back up." This is what I basically said. And guess what happened? Well, let me see if I caught it. I know I caught it. Yep, here it is. Well, nope, that wasn't it. Here it is. So here it is. It jumps up. What does it do? Pull back right to the same area, and then it starts moving up. So I start noticing fair value gaps here and there. Fair value gaps are imbalances. Imbalances are what price is attracted to in smart money. So it's all about which imbalance it's going to try to fill first before it moves on to the next one, right? So as you can see, there was a 4-hour imbalance up here. So it comes up here, fills it up, drops. But there's also a 4-hour imbalance in here. This is the daily that we're looking at. and it drops down. So I said there's a couple things it could do. Well, one of the things would be to come up within the hourly. Hold on, let me see if I went too far. Um, yeah, so I'm saying it would probably reach up to the bearish order block and then drop. And then I look up and I see that there is this imbalance right here on the 1 hour actually. And it could probably jump up, hit the premium, and then drop. And what did it do? It came up and filled that 1 hour fair value gap to the T. I mean, the bodies of two of the candles filled the entire gap. The next two candles were right at the premium of the fair value gap, meaning it was at the 61.8% of the top of it, not from the bottom. Um, and so then it started dropping. But I said it would probably drop until it hit a bullish order block and then jump back up. And it hit the 4 hour fair value gap, which it did. And then I look above and I see a daily fair value gap. Now, currently, we are still in my original stop loss, but I think it's going to go above, possibly, and get into this daily fair value gap and then drop down into the monthly. Now, I could be wrong. I could be wrong. I could be wrong in the fact that it's waiting to go up to the daily because it formed a daily a couple weeks ago, or last week, I guess I should say. When was that? October 3rd. So that was Wednesday, right? No, Monday. So, actually, it was October 4th. Well, no. October 3rd was actually the day. There was a gap. So, I had a gap for the daily. It wasn't a big one, but to yesterday, technically yesterday, it came down, went through the gap, went back up. Today, since 7 p.m., I guess you could say, it started, it went back down, filled the rest of the gap. So that gap has now been mitigated. Mitigated means it basically no longer exists as a gap. The gap has been filled. So now the question is where to go to next. Well, if you look just above, there is another imbalance. But the thing is that we are currently on today's candle. So it's not technically a gap because it could still fill in the rest of it and it not be a daily fair value gap. But it couldn't. I mean, either way, I have a feeling it's not going to reach all the way up into here. If you look at about halfway through, you see that there is the wick here from this bearish candle. Now, wick is about halfway through the daily fair value gap. That is what is called consequential encroachment. Generally, what happens whenever you see this, and you see it a lot, I've seen it a lot in every single thing I've posted, probably just above here. Here is a fair value gap. Here is the consequential encroachment. Guess what? You see it on the bearish order block as it starts to go up. So it could be one of those things to. This is what I was thinking anyway. Is that since there is the consequential encroachment coinciding with the bearish, you know, um, uh, order block, that it could come up, hit that, get rejected, and then get knocked down. But since we have another one below it, it could come up, hit this consequential encroachment, and then get rejected and get knocked down. And then the daily that we have up here, it may want to fill later. And we may actually be on our way to the monthly fair value gap, which is this big green area right here. That's wide open. And I think with something this large, fair value gaps don't have to be filled all the way in smart money. All right. Generally, the overall consensus is that it'll at least get halfway. So that's why I am personally thinking halfway and done. Halfway and done, and then it'll start going back up. I mean, it's been consolidating in this area for quite some time, and it is giving us no reason as for it to be moving up. And now it did cause a little bit of a low back here back in June, but that June, all it did was enter the fair value gap and then leave as soon as it entered. Now, to me, that's kind of a sign that's saying, okay, we hit the fair value gap, but we did not mitigate it, and it needs to be mitigated. So that's why I'm thinking it still is on its way back down. Now, right now we have currently equal highs, right? Equal highs are what make people think that they have a safe short. And this is what makes me think that it's going to get above those highs and then short, because that's what smart money likes to do. They like to make you feel safe. So, by making you feel safe, they could run these highs. Everybody's shorting here. Boom, it comes up here, and instead of, they could have a short stop loss, or they see it run past this. They think they're going to catch a breakout. They turn around and change their trade, and they go along with it. And then it hits the consequential encroachment halfway through, or it gets to the top where the main bearish order block is, which that's highlighted here, that just popped up, and then bounces down the other way. That's my initial thinking, and that's above my original stop loss. So that's why I didn't move my stop loss all the way up to 22,000. So, yeah, I mean, I'm in this for the long haul, because I've taken some profits here and there. Um, when it did get down into my take profit zone, um, just so I didn't lose out entirely whenever it came back up, I also added more short positions, just so if and when it not actually when and if, because it will drop, then it'll come back down to here, and I will be uh, my percentage of win will be a lot more than my percentage of loss. If it hits uh, the consequential encroachment, that is a 17%. Well, actually, if it hits the entry of the fair value gap, that's a 17% win. Now, if you have leverage on that, it's going to be about 3 or 4 times more than that, depending on your leverage. If it gets all the way down to my take profit, that's a 24% drop with leverage. Jeez, I don't even know what that's going to be. Somewhere in the 60s to 80s, probably, depending on your leverage and depending on what size lot you're using. So, that's why I am in this for the long haul. That's why I believe it's really going to come down here, because time has shown us over and over and over again that these monthly fair value gaps have been filled. All you have to do is look at a monthly chart just to see. So if you look at a monthly chart and you go up above, if I can get it to go up above, you can see that there is a monthly fair value gap right here, with this golden outline, and as you can see, it has come down, and it hasn't mitigated yet, but it's filled up most of it. Mitigated means that it's going to fill it up on both sides, basically. On the it's on the downside. It's going to make sure that all of it is covered. Now the thing is, with this fair value gap, I didn't mean to move that. Let me go back 2 times on that one. With the top, oh come on. As you can see with this one, it drops sharply, and so there is a top part of this fair value gap that is still pretty much a fair value gap. So it would be from the top of the fair value gap, which would be right around in this area, and it would go toward the next top of the candle, which would be right there. So you have from about 27,800 down to about 25,200, somewhere on there. That is going to be an area of consolidation, more than likely. It's going to jump up there, and that's going to be the mitigation of that fair value gap. And the fair value gap above that was on the monthly was this one right here. As you can see, it dropped down. Okay, it dropped down again, and it dropped down a third time. So if you see three wicks going into it, that is a definite mitigation. Plus, on your side, you have a drop down into it, a pull back up to the top, and then a drop again. I mean, that is definitely mitigated. So, and then I'm sure there's tons more. Yep, here's another one. Fair value gap, monthly. Oops. And boom, you can see it went through on one side, it went up another, went down this side, came up, and went through, stayed up here, and then went down again. So this fair value gap mitigated. So, and that's just the monthly. So I mean, we're not even looking at the weeklies that have been shown. I think this one's a weekly, if not a daily. Oh, this one's weekly. Okay, so there's a weekly up top that hasn't been negated, which tells me that it will eventually want to get back up here to that price. So I'm still bullish, overall bullish on this, but I don't know what I wrote here. Oh yeah, that was what I wrote when I was doing my silent one, so I can get rid of that. Um, that is the price I was talking about, and this was on here. Whenever I first wrote the idea, it's talking about a larger time frame, smaller ones, and that's why the monthly fair value gap will actually get dropped into and get mitigated. Now, the weird thing is how it doesn't do the same with Ethereum. A lot of people would think that an Ethereum would kind of go hand in hand. Even though they do similar movements, if anybody's been paying attention to Ethereum and Bitcoin the last couple of years, they kind of do, but they are not the same. Okay, so I'm going to use this as an Ethereum chart, even though it's Apple. I had to write to somebody that it was, I don't know what their idea was. Like, it's time to buy this now, an Apple. And it was the day that it bounced up, and I was like, no, it is not time to buy for Apple. Then there's a gap up here, and it's going to fill that at most. After that, it's going to drop. That was basically exactly what I said. There's a little gap up too, but it's hard to see unless you get real close. I'm on the daily, and I mean, this thing is definitely going to come down for below this marker here on Apple. So get ready for prices of 128. I wish I had the money for option because I would just absolutely kill it. Um, but that is going toward FINRA's licensing. And if anybody can indirectly help me out by signing up for MEXC or buying some Ledger, that would help me out a lot. But if you want to directly help me, you can do that too. I'll put that information in the description. But I am looking up Ethereum. And by the way, I do want to mention that with Ethereum, I kind of had a profit call back in July. And that profit call was, hey, Ethereum just kind of ran up out of nowhere. Be prepared for it to drop again back to prices somewhere around 1280 and 313 something. And that was on July 18th, and that was when it jumped from about 1200 to about 1500. And everybody thought, hey, this bullish move, look at this, it's gonna take off. And I did not fall for it. I knew it was coming down. And I can show you that tweet if you want, or you can just go to my Twitter and see it because it's the pinned post. And so, with what is called the market maker buy or sell model, this was a this is a sell program. Actually, it might still be a buy program. So what happened is as it came down to this bottom. Now, the reason I say this is different from Bitcoin is because this is the lowest monthly fair value gap that Ethereum has. Not the lowest, but the lowest significant monthly fair value gap. As you can see, there's another one here that it did drop into, but it's a very small one. And the thing is that if right now with prices the way they are, I'm afraid if it was to drop into that, it could potentially scare anybody out of it, retail people anyway. Because look, as you can see and this is another thing I like to look at is commitment to traders reports. They tell you where positions are and who has those positions. So large traders are actually, well, they're predicting a drop. Small traders, they didn't really move much. And then commercial hedgers, the large, institutional people, they actually went up a little, which is interesting because commercial traders, they have so much money that this big drop could have came from most of the commercial hedgers. This is just open interest, right? Open interest means how many positions did they open, right? They opened 2 positions, and those positions could have had, or I forget, maybe the other way around. Maybe they opened 1,000 positions with very little money on, so that way in case it went the wrong way, they could just close the positions and get out. or they could have two positions with a lot of money in them, and that could also cause this huge drop. That way, in case they're right, boom, two positions is all it took to get this open interest all the way down here, and the commercials, it doesn't seem like it moved a lot, but because they have so much net interest, or so much um, open interest, it really didn't affect them because their open interest is all over the place. But with large traders, they think there's a drop. And that drop from September to the beginning of October. October looks like there really wasn't much of a change. And as you can see, it got all the way up to 2,000, right around in here, made double highs, and then started dropping. And look, you can see that fair value gap right there. It eventually came up, got filled, and then dropped again. And look what we have here, another fair value gap. And this is on the daily, by the way, but this looks like a 4-hour fair value gap because the daily is even bigger. So there's a fair value gap above here, and for me to actually think that it would be dropping down into here to where there's a small monthly fair value gap and a couple weeklies, I just don't know if it would. And here is where, back in 21, where these gaps started. I just don't know if it's going to want to reach back down into here just to get those imbalances filled, especially whenever the previous high was way, way above that. If we didn't, yeah, see here's the previous highs. I mean, the same thing happened. Bitcoin had very, very high highs, but it's also around, right, the prices for those highs are about where it is right now. So, and this, what I have